Welcome to Holistic Accountant Podcast, where we aim to showcase how adopting a holistic approach in accounting and tax maximizes value for clients. Beyond traditional tasks like preparing financial statements and tax returns, a holistic accountant focuses on offering advice that maximizes personal wealth on an after-tax basis. If you enjoy this episode, please consider leaving a rating and sharing it with those who might also benefit. And to ensure you stay updated, subscribe to our weekly email. The link is in the show notes. Okay, today, Mena, I would like to talk about, what does a health check involve? So your holistic accountant hopefully should be preparing all your annual compliance, taxation, BAS, financial statements, all the usual sort of things, and I don't want to undermine the value of that. That work should be done hopefully on a timely basis and with a lot of accuracy and care and so forth. But what else should your holistic accountant be thinking about, or what can you ask them to run the ruler over? And so today, Mena and I just wanted to talk about, what else in addition to that annual compliance work or the regular work that an accountant does, what else can they provide value on? And, I think it's always good. You don't necessarily need to do it every single year, but periodically, every few years, I think it's good just to put the accounts to a side and the usual sort of matters that you talk about and sort of just cast the net a little bit wider and seek that feedback and that value input from your holistic accountant. And I think the role to do that, or the driver to do that, should come from both parties. That it's really difficult to try and add value-adding advice to a client that's not ready to receive it or to act upon it. So it can't be just driven from the accountant side. It's really got to be a combination of both client and accountant driven. And so knowing that, that's why we wanted to record this podcast, so that we can kind of guide you of what are some of the questions you should be asking, where should you be directing your accountant's attention. So the first thing is talking about sort of financial ratios and business health. And we spoke about this, and we'll include the links in the show notes to these previous episodes. But back in season 3, so a couple of years ago, episode 32, we talked about all the different financial ratios that we can look at that are going to be different for different industries. But it's really about, looking back at potentially kind of year to date, depending, because you don't just want to look at the last tax year, because that could be 6 months, 9 months ago, but also looking at kind of year to date data. And hopefully our data is very timely, with data feeds and so forth. We should be able to see what our year to date results are, back to the most recent closing month, and look at the ratios, look at the profit ratios, gross and net profit ratios. If we're a consulting business, what proportion of our total revenue is spent on staffing costs? How does that align in terms of ratios? If we're a product business, things like stock turnover and these sorts of things, all these sorts of ratios help us really understand the financials, and then also hopefully inform us on where we should be focusing our energy. And we, both Mena and I, believe that there tends to be only like 1 to 3 sort of key priorities where if you spend 80% of your effort, that's where you're going to generate the best outcomes and results. So have a look at that episode, season 3, episode 32, of course. Link is in the show notes, but that's one of the things that I think we should be looking at as holistic accountants.
The second thing is around your business structure. And I know we've spoken again about this in actually this season, episode 3. And I think it needs to be visited at least annually in terms of your business structure, because things can change in terms of your personal effects, whether it be, adding on or tacking on new businesses or new service lines, or, it could be personal things such as marital breakdowns or relationship breakdowns. To review your business structure every year allows you to make sure that you're in the most tax efficient structure, and also that all your assets are personally protected. Now, sometimes there's costs around changing business structure, but what your holistic accountant should be doing is weighing up the cost versus the benefit. So reviewing your business structure is incredibly important. I would be doing it just to ensure that your shares are set up correctly in the right entity, the right vehicle, your trading businesses are set up in the right vehicle. If you've got a sale on the horizon, for example, what do you need to do in terms of your structure to, for example, access the small business CGT concessions? All these things should be considered when reviewing your business structure.
The next thing to talk about is profit distribution strategy. So obviously most people meet with their accountant to review the most recent financial returns. Again, that's almost always, well, it is always after year end, but it can be, anywhere from 3 to 9 to 12 months after that year end. And so quite often the conversation is focused on, okay, what are the tax liabilities as a result of that financial year and how are we going to deal with them, minimise them, manage them and so forth, which is fine and it's necessary and it's fine to sort of talk about everything that has happened. But I think some of the time should be spent on, okay, but what are we going to do with profit this year? And that should be hopefully a regular conversation throughout the year if things are changing. But also we should have an idea of what we're going to do with the profit. Are we going to distribute it? How are we going to distribute it? Now, it's such a valuable topic that we're going to actually talk about it in next week's episode, where we're going to go through some of the things that we like to think about when coming up with a distribution strategy. But that's one thing is to ask your holistic accountant, what are we going to do this year with profit? And is there anything we need to do in advance of that? So do we need to pay more PAYG instalments so that we've got more imputation credits in the company to pay a dividend, for instance? Do we need to make sure we've got any beneficiaries that we might distribute to sort of lined up and have tax file numbers and these sorts of things? All those sorts of things that, you want your accountant to be proactively managing.
And then also need to look at outside your business, so your personal assets and liabilities. And this could include things like your income protection insurances and your life insurances. A lot changes throughout the years. For example, you might have paid down a whole lot of debt and you don't have many dependents left and you've got a strong asset position. So the question then becomes whether you still need your life insurance. And obviously they get more expensive as years get on. Similarly with your income protection, should we reduce or increase waiting periods because you've got, such a good asset base that will significantly reduce your premium amounts. So all these kind of things your holistic accountant should be considering as they get to know your personal assets and liabilities. Further to this, mortgage rates and structure. Are they working with a great broker that's keeping them appraised of what rates are out there in the market, who's become competitive in the sole trader industry, in the personal PAYG industry? How's your super looking? Is it in the right fund? What's the underlying investments in those funds? How your shares and property investments are structured? Is there anything that needs to be done there? If there's any dud assets that should be considered to be sold off? All these kind of things your holistic accountant should be working with the right advisors to properly advise on these matters.
And finally, asset protection can be something that needs to be considered again periodically. We recorded an episode mid last year regarding this, so season 4, episode 24. And we spoke about, making sure that your business is structured and everything is structured in order to protect your assets. All well and good to build wealth and minimise tax and do all these sorts of things, but you just want to make sure that your wealth is also protected. So things like shareholdings, directorships, insurances, all these sorts of things need to be considered and all go to asset protection. But even things like binding financial agreements. So, if you've entered into a new relationship, is there anything you need to do to protect your assets? Or, and it's becoming a lot more common these days, if you're going to make gifts to family members or particularly children, how do you protect the family's wealth in that regard as well? Well, that comes back to, potentially how you structure that gift in inverted commas or using binding financial agreements. But it's really about sitting back and taking a few minutes to think about what could go wrong here and how are we going to protect ourselves. So there you go, just as a sort of summary, overall sort of financial ratios, business health, review business structures, have a discussion around profit distribution strategy for the current and future financial years, run the rule over all your personal assets and liabilities as well, insurances, mortgages, super shares, other investments as Mena spoke about, and finally asset protection. Now we've mentioned a few previous episodes in this episode, and of course we'll make sure we include the links in the show notes to those episodes so you can go back and have a listen. Next week we're going to talk about all the things we think about with regard to coming up with a profit distribution strategy. So for anyone in business, I'm sure that one will be of great interest. And until then, bye for now.